The Mayberry Investments Limited Virtual Investor Forum has been the standard for investor education in Jamaica for decades, where top financial minds provide comprehensive insight into the market and ideal investment strategies and opportunities for our clients. Celebrating 37 years of excellence in investment banking. The Mayberry Virtual Investor Forum, investing in Jamaica.
Good evening, ladies and gentlemen. I'd like to welcome to yet another Mayberry Investor Forum. I'm your host, Dan Theok, Senior Vice President of Investment Banking. Today's topic and discussion will be on Jamaica Producers Group, and joining us is none other than the Group Managing Director, Jeffrey Hall. Hey, welcome, Jeffrey.
Hey, Dan. Good to be here.
Thanks for coming. Good deal. So we'll be doing a feature on Jamaica Producers Group and looking at your December year in particular, and I look forward to that discussion. I'd like to give apologies for Chairman Berry and Gary Parrott, who will not be able to join us on the program today, so let me extend apologies on their behalf. But instead, we have the big man himself, none other than Jeffrey Hall. If you're a fan of the content, please subscribe to stay up to date with our uploads, and be sure to hit the bell to receive notifications. We publish videos like this once a week. And those of you who are participating in our trivia questions on social media, stick around as we'll be announcing the winners at the end of the program. If you're looking to embark on your very first investment journey, take that first step with Mayberry Investments Limited. Follow us on social media today to get started. Okay, so JPG, Jamaica Producers Group. Jamaica Producers has been actively contributing to Jamaica's development for over 90 years. The group operates in two lines of business, both locally and internationally. Those are food and drink, and logistics and infrastructure. JP's Food and Drink division comprises the group's vertically integrated portfolio of subsidiaries that are engaged in farming, food processing, distribution, and retail of food and drink. In JP's Logistics and Infrastructure division, the group maintains strong investment in the shipping and logistics industry through a 42% share of Kingston Wharves Limited, the Caribbean's leading multi-purpose port, and through its wholly owned subsidiary JP Shipping Services Limited, a leading freight forwarder which provides shipping services between the Caribbean ports and the United Kingdom. JP also holds a 50% stake in Geest Line, the leading refrigerated shipping line in the region. And now we want to talk a little bit about the man himself, Jeffrey Hall. Jeffrey was appointed Group Managing Director of JPG in 2007. He currently serves on JP's Audit, Executive, and Governance Committees. He's also the chairman of Kingston Wharves Limited, Blue Power Group Limited, and Lumber Depot Limited. He's the director of Geest Line Limited, Sage Logistics Infrastructure, Epley Caribbean Property Fund, to name a few. In 2022, Mr. Hall was awarded the Officer of Distinction in the rank of Commander Class by the Government of Jamaica. Today, he'll be telling us a little bit about JPG, and I'll be doing a presentation as well. So once again, welcome, Jeff.
Thank you, Dan.
I feel like we missed a lot of things. He's a very humble guy, folks. He's very accomplished academic and has kept a great company. I've actually known you for over 30 years, and it's a pleasure to have you on the program. And he's kept company in startups when he first got going out of college with the likes of Nigel Clark and David Panton. I won't hold that one against you. And Eleanor Brown, and a bunch of genius kids who are all Rhodes Scholars essentially. So it's great to see you come along over the last 30 years, and I'm just a humble little accountant, so it's great to have you on the program, Jeff. But seriously, thanks for all you've done and for your great contributions. I'd also like to give special shout out to the great contributions of your dad, Marshall Hall, who passed away last November after serving the group for more than 40 years. And it's great to see the next generation coming up in the business, and by virtue of his accomplishments, his brain power and his great vision as well too. So he didn't just inherit it, folks. He's worked himself hard up into the business, and I'm sure Charlie Johnston, your chairman, would not have you there if he was not more than capable. So thanks for being with us. Thanks for continuing the legacy of your dad. I look forward to doing a deep dive on the numbers and hearing a little bit about your vision and where you're taking this business to over the next 40 years. Okay, want to show you guys the results for the year ended 2022. It's a calendar year end. And the results were fantastic. And it's not just because they're coming out of the pandemic. The numbers are just great, generally speaking. And I do want to jump into them a bit. So for the full year, revenues up 16% to $29 billion. Gross profit up 9% to $7.6 billion. And ultimately delivering a net profit after tax of $4 billion, up from $3.8 billion the year before, and then the profit attributable to shareholders of $2.3 billion, up 25% from the year before. And when we talk a little bit about it, you'll appreciate that the food and drink business delivers about 60% of their revenues. Tight margins there, maybe 3% profit margins, whilst the L&I business, the logistics and infrastructure business, delivers about 40% of their revenues, but maybe 90% of the profits of the business. So a very profitable segment in the logistics and infrastructure division. And as we mentioned before, 90% of that profit, 80% of that profit comes from their stake in Kingston Wharfs. And so it's hard to read JP without looking at Kingston Wharfs, and they're obviously the largest shareholder in Kingston Wharfs. And as we mentioned, Jeff also he's the chairman of Kingston Wharfs. Is that correct, Jeff?
Yep,
Good deal.
correct.
So he runs both businesses essentially, folks. So great results there. $2.3 billion profit for the year, up 25%. Total assets of $47 billion. Shareholders' equity up to $19 billion. And the company's really run nice and lean. Very low leverage, less than 11% debt to equity ratio, $12 billion in cash and cash equivalents on their balance sheet. So he's poised to do a lot of deals. And JP is a conglomerate that basically owns about 30 plus subsidiaries, all run very efficiently. Over 2,000 employees, 50% of them in Jamaica. When last I checked, Jeff will correct me if I'm wrong, maybe 30% in the Dom Rep and 20% in Europe, something like that. So
That's about right.
Impressive numbers. It's really a conglomerate. And so it's a great investment for folks who are serious about the stock market, who are long-term investors. It's a great stock to be looking at. That's asset rich, has a lot of cash, very little debt, and is very focused on their delivery. To give you an example, if we go back to 2017, 5 years ago, and you guys know I like to do this because I'm a long-term investor, and I started my serious journey investing about 5 years ago under the tutelage of Chris Berry. This is a stock I bought at $16 5 years ago when their revenues were $16 billion and their profit was about $660 million a year. So just listen to that carefully. 16 billion revenues, 660 million profit. Today, they've grown those revenues 181% up to 29 billion, and they've grown that profit by 250% to $2.3 billion attributable to shareholders. So I'm a very happy shareholder, Jeff, for what you guys have delivered over the last 5 years. And I don't worry myself too much about the stock price. I think in time the market will appreciate what you're doing. But the stock price is at $21 today. That's 10 times PE in a main market, which today is about 10 times because PE ratios are a little bit depressed with the higher interest rates. But I have no doubt that when you consider the track record of growth and performance over the last 5 years, that in the next year or two to come, as interest rates start to trend back down and PEs start to go back up, that this stock has a lot of potential for growth. So I still think it's a great buy at $21. And, the type of stock you definitely want to have in your portfolio if you're serious about investing and holding stocks for the long term. Next slide shows the quarterly performance. So again, we can see some challenges throughout the pandemic, but in the last 3 or 4 quarters running, we can see they're consistently doing over $400 million a year per quarter, and in the last quarter, delivering $845 million. Fourth quarter in the last 2 years seems to be a very strong quarter for them. So there's a little bit of seasonality there, I suspect. But in general, I really don't have any complaints. I like the way this graph is looking, and I have no doubt that it will only get better. Next slide shows the share price, and share price has been relatively flat, little ups and downs here and there, but for the main part, it's been kind of flat in the $21 space for the last year. And so again, I feel that in the next year, again, as I said before, as the interest rates come back down, that the stock is eventually going to move. And it's the stock is like that. It sort of moves in steps, and then doesn't move for a long period, and then it moves in steps. But just a great asset to have in your portfolio by virtue, like I said again, of the low leverage, the high amount of cash, and the growth and profitability over the medium term. And I have no doubt, folks, that this growth is going to continue. And hopefully by the time we've finished our discussions today, you will agree with me too. So I want to jump into our programmed questions. And I want to remind our listeners out there that you too can send in your questions on YouTube, and we will take a look at those questions as we go on further into the program. But let me start first with our first program question. Guys, if you can put that up for me. First question. That's a good thing I have a backup here on paper. Jeff, are there any plans to spin off one of the subsidiaries in your newly formed conglomerate?
Well, Dan, thanks for the introduction. I don't know if there's much more I can add than you've already put on the table, but let me back up by not assuming that everybody's aware of what we're doing by way of an amalgamation.
I agree with that.
With PanJam Investments. Mm-hmm. So in November of last year, we entered into what's called an amalgamation agreement. And that agreement has us transferring most of our operating businesses, and by that I mean substantially all of our assets, operating assets, to PanJam in exchange for 34.5% of the shares of PanJam. And that will have us as one of the lead shareholders of PanJam. And that combined enterprise will be renamed the Pan Jamaica Group, and it will include the things that we do now, about which Dan spoke, as well as the things that PanJam does. So at the headline, I would say that in general, we find ourselves more likely to be buyers than to be sellers of businesses. Okay. And I think that's going to continue. So we will look at our portfolio in light of the current environment, which, as you know, is fairly volatile, and look at individual businesses from time to time. But we don't have any burning desire to sell anything. That's number one. And number two is that the lines of business in which the overall enterprise finds itself, we think are the right lines of business. And just to give you a bit of a long-winded narrative on that, so your viewers and listeners have it, the combined enterprise will find itself doing 4 broad business activities. And we'll tell you why we're doing them if you're interested after this. Absolutely. So number one would be property. And that property is primarily in Jamaica. And we're going to view it as property and infrastructure because holding property in Jamaica at the level at which we hold property in Jamaica means that you need some exposure to infrastructure. And in any case, we have a big infrastructure asset in the form of, say, Kingston Wharves, as well as the things that we're doing jointly with Epley in water and intend to continue doing. So property and infrastructure is one big bucket. Another big bucket for us would be what we call specialty food. And the primary revenue line from that enterprise will be in Europe, in fresh juices, in now in the Netherlands primarily, but also in Spain. And we see ourselves expanding in that space. And of course, we have our Caribbean food businesses, which are largely manufacturing businesses, snacks, baking, water in the DR, but also include our agricultural business that we're probably most known for. So that's the second bucket. A third bucket is a bucket that we're loosely calling global services. And that bucket includes services that by and large are connected to the Caribbean or related to the Caribbean in some way, but they serve the world and therefore they have to be competitive on a global scale. And that includes investments in the BPO space, investments in the tourism space, hotel operations, attractions, and of course, coming from the JP side, investments in freight forwarding, and you mentioned Geese, which of course is shipping. And the last bucket is exposure to financial services. And in that space, we're talking largely about the 30% interest that PanJam holds in Sagicor, which, as everybody knows, has a leading position in financial services, broadly defined, including pensions, health, life, general insurance, Cambio, money services, banking, etc.
Great.
So those are the businesses we're in, and we plan to stay in those four businesses.
Excellent. And tell me a little bit about the newly formed group. I've read it, but I just wanted to hear it here for the benefit of the folks in terms of what role you will continue to play versus Stephen, et cetera. How can we think of the organization of that new group going forward?
Sure. So we've written down a few things, and we intend to live by those few things. But I think the major theme is that we're working together. So this is an intentional amalgamation or joining of what we think are the strengths of both enterprises. And if you were to ask us, why are we doing this? We're doing it because we like what PanJam is doing, and we like how it does business, and we like the people involved. We felt that we wanted more exposure to Jamaica. We can debate what's happening from day to day, but in our view, there's a long-term good story in Jamaica. Jamaica went for many years without logging significant growth, but we think it's in a frame where it ought to compound at a reasonable level, and we wanted more exposure because we think it's a space that we understand, and we think PanJam puts us there. Conversely, my sense of what PanJam wanted is that they wanted exposure to our international assets or internationally connected assets, and I include Kingston Wharves in that. And so this is not about us coming together to say, okay, how can we cut, heads at the top? This is about us coming together to say, how can we grow? So what's on paper is that Stephen Facey will be, as he is now, the chairman of the combined enterprise. I will be CEO, and Joanna Banks will be president of the company. And we see ourselves working as a team along with the boards, which would include directors from Jamaica Producers as part of that enterprise, including Charlie Johnston, who is the JP chairman. I would say one of the things that I am interested in looking forward and feel very good about is that the group of folks that I just mentioned are different in age. And from where I sit, it's a great succession prospect. So I think we see ourselves having a very long runway. And I mentioned a few names, but there are others in that group. And that, for me, is also very reassuring about this transaction.
Yeah, absolutely. And I think, it's probably going to be the biggest deal of the year to see two reasonably large, three if you count Kingston Wharf's balance sheets all coming together to push in the same direction, each of the three balance sheets being, $20 billion and above hard assets. And I think they complement each other pretty well. So I'm excited about the combination. Again, I think I read that both companies will remain listed on the stock exchange.
That's correct.
Good deal. So PanJam folks don't need to get word. JP folks don't need to get word. The deals were approved by both sets of shareholders in your respective AGMs. And so we look forward to that deal getting done, perhaps in the next 90 days or so.
Yeah. Yeah. I mean, the timeline that we have is to definitely make sure it happens within the Q2.
Good deal. That takes me to my second plan questions. Are there any plans for a future capital raise for the new conglomerate in the future?
Yeah, it's a fair question. Our shareholders' equity is somewhere between 450 and 500 million US dollars, depending on the day of the week, assuming that we use US denominated in Jamaican dollars. And we definitely have space to accommodate more leverage if you wish. And you mentioned the JP balance sheet at the outset. And so I would say that from the standpoint of equity, I think that we're reasonably well covered in the immediate term, particularly given where the equity market is.
Reasonable. Okay, good deal. And then, are there any other inorganic growth strategies underway presently?
And by inorganic, I think you mean acquisition?
Acquisition, yes.
Yeah, I think looking back at JP, it's fair to say, and I think the same is true to some extent for PanJam, but acquisitions are a really core business for us. So just to be blunt with everybody involved, we're always looking at deals. We are a holding company. We've found that we're able to deliver shareholder value by identifying good deals that we have the capacity to execute. And so the short answer is yes. I mean, we're looking at so-called inorganic opportunities all the time.
Right.
And we don't plan to stop.
And Jeff, tell me, I personally am a little curious. So the L&I business, logistic and infrastructure, looks to be more profitable, generally speaking, than the food and drink business, and yet you only own 42% of Kingston Wharf. I'm in love with that business. I think it has huge potential for growth. Could we see you guys in the future increasing your stake in Kingston Wharf, do you think?
I think it's fair to say that we can do more in logistics broadly defined. And over the last couple of years, we've done deals in that space. So Kingston Wharves is one. And over the last, say, 18, 24 months, we took 100% interest in Miami Freight and Shipping, which is a Miami-based freight forwarder that we think complements our UK-based consolidation freight forwarding operations and is very much consistent with the opportunity that we see in logistics and e-commerce and to some extent more trade with the U.S. relative to other places in the world. And we took a 50% interest stake in Geest, which we think is an excellent business for what we do. And that business has 5 ships that originate, if you will, in the Netherlands, a place that we understand, and the UK, bring cargo down to the Eastern Caribbean, collect cargo in Colombia primarily, and the Dominican Republic as well, and do a loop continuously. It's a weekly service. So it's a pretty substantial operation, and you'll see the income from that in our associated company line, but it's a very substantial business with revenues on the order of maybe 90 to 100 million pounds.
So you're taking advantage of the return legs where you guys can sort of export your refrigerated fruit and whatnot back up to Europe?
The synergy with that business that we understand it. That business is not called Jamaica.
Right.
It does carry cargo that we originate with our UK-based freight forwarding business that sends cargo down to the Eastern Caribbean. And that's but that business, that freight forwarding business relates to the shipping line as any other freight forwarder relates to our shipping line.
Right.
And it wouldn't constitute a material share of the revenues. That business is a standalone business that provides an important service to folks who are moving fresh fruit, primarily from the DR, from Colombia, from the Caribbean to Europe,
right,
and folks who are moving consumer goods, vehicles, you name it, from Europe to the Caribbean. So it wasn't a synergy play.
Okay.
It was, for us, a value play. We thought we could bring leadership, direction, and we got a good price for the business, and that's part of it.
Okay, that's good to know. So it's not necessarily supporting your own exports out of the DOMREP, where, in case you folks didn't realize, again, I said it earlier in the program, 30% of their employees are in the DOMREP, where you guys do manufacture quite a bit of the snacks, whatnot. So it wasn't to take advantage of your personal export opportunities out of DOMREP, but instead just the value that you saw, generally speaking. In that.
Right. So that business was for sale because of circumstances that affected its parent company. And, the business required an owner, or two owners in this case, that understood how to source refrigerated ships, and our partner is very well invested in the business of operating refrigerated shipping ships. It needed a person who understands the banana trade.
Right.
We are not big in the export banana business, but we have that muscle memory very much entrenched and know the participants both in the DR, Colombia, Europe. And it required somebody who understands how to get stuff back to the Caribbean. The barrel trade, for example,
Right.
is still material, consumer goods, vehicles, etc. So it has very natural owners, we think, in ourselves. But your wider question, Dan, about the profitability of the two segments, I think it's fair to say that at this moment in time, the logistics business is a higher contributor to our profits, and the food and drink business is not. There are two things that I think viewers should be aware of. The first is that the logistics business, particularly Kingston Wharves, is a very capital-intensive business, so it needs to generate significant returns, even with relatively lower revenues. And so it's an important cash contributor to our earnings, but we have a lot of capital at risk there. The other thing to know is that we've intentionally viewed ourselves as wanting to be diversified. And when you look back over the last, say, 24 months, shipping prices have impacted the margins in the food business. So you've had margin compression in food.
Right.
And if you look at your portfolio of businesses that have exposure to food, you'll see that.
Yes.
But on the other hand, it's been a couple of good years for people who have shipping lines. And it's conceivable that the reverse can be true at different points in time. And so we're happy that we have both legs.
A very diversified portfolio. Yeah. And that was the question I picked up on too. I think you kind of answered it. So I did see your CapEx for the group jump from $1.7 billion to $3.3 billion in the last year. And so I was curious to appreciate what's driving that. I think I saw $2.7 billion of that down at the Kingston Wharf level. So could you speak to a little bit about what's driven that increase in CapEx, whether it was one-off or you sort of think that's going to be the routine level of CapEx that the L&I business requires?
Yeah, so there's CapEx in both food and drink, largely maintenance capital, but some expansion in specific places in Europe, in our juice business. But the largest share of the capital has been spent in Kingston Wharves, and we're doing a few specific things all at once, which we think will serve the business for the long term. And we're very pleased to have organized ourselves to be able to handle the financial commitments. The first thing that we're doing is expanding one of our berths to be able to handle more larger ships all the time. The nature of aspects of the shipping business are like, they say, building a church for Easter Sunday. You've got to be ready when the ships want to come. And they may all want to come on some of the days of the week, etc. But in our particular case, we also need to accommodate larger ships with a deeper draft. And so we're spending money to accomplish that. To redevelop a berth is a ticket size of about $25 to $30 million. US dollars, excuse me. And so that gets you the berth and what's called the apron, which is immediately behind the berth. But to really make use of the berth, you need to clear the land behind the berth. And so we have a number of warehouses based on the traditional modus operandi of the business that are on the backlands behind the berth, if you will. And our intention is to build state-of-the-art logistics facilities off dock, but nearby. So we're talking within maybe a kilometer or so of radius of the port. And so we've identified an excellent site for that. And the plan is to build 130,000 square feet mixed use. So it's both ambient and cold storage. And so we're doing that as we speak.
Good deal. And you guys are sort of, what size vessels are you handling now, and what size are you moving up to? Are you handling Panamax yet at this point in time?
So we have we have the crane capacity to handle
the Panamax
vessels, and we have at 2 berths the draft to handle it.
Right.
And so the question is not whether we could or couldn't. The question is how many at the same time.
Got it. And so we're talking about north of 12,000 TEUs for folks who aren't appreciating.
So that's not what I would describe as our core business for what we're doing. So there are folks who build terminals to handle long haul, very large vessels.
Right.
Our core business is to handle the regional business of a diverse range of cargo. So the nature of the port business is you can either have highly specialized, high capex intensive cranes that handle very large vessels,
Or a multi-purpose port.
or you have a multi-purpose port that can do lumber, steel, grain, cars,
Got it.
caustic, liquid bulk, you name it.
And you guys are transshipping to north of 26 countries, I want to say. I'm sure the number is north of 26.
North of 30 countries.
North of 30
and
countries.
a wide range of cargo.
Excellent.
So the ships that we do are not necessarily the largest ships in the world.
Got it. But the business you do now, and again, taking advantage of the location of Jamaica, and this business is all about location, which is coming through the Panama Channel. Jamaica is just a naturally logical stop for the guys to break bulk, and then you can do the transshipment from Jamaica to these 30 different countries, which now includes Central America and parts of South America. To explain to folks, we don't have 30 countries in the Caribbean, so it means you're getting to Central and South America as well too.
We go as far as Australia. I mean, within that list of 30 countries.
Wow.
But part of it is the location. The location is hugely important to our business model. But the other part is that Kingston Wharves owns its own land. And it's a well-invested private enterprise. And when you look around the English-speaking Caribbean, there aren't too many private, multi-purpose public wharves in the Caribbean. And that means that we're operated very efficiently. We have a great team there, great partners, shareholders.
So in other words, you're
so
very
it's working
competitive
for us.
in terms of your pricing, in addition to the logistics, yeah?
Yeah.
So folks aren't going to go all the way up to Florida and find cheaper prices. Plus, it's 2-3 days further sail as well too. So I'm happy to hear that. And I personally still think that in terms of transshipment, that Jamaica has huge potential to continue growing in that regard. So do you imagine Kingston Wharfs being able to grow their revenues by 40-50% over the next 5 to 7 years? I mean, do we have that kind of potential future growth, would you say?
The short answer is yes. I mean, when you look at the scale of global trade and Kingston Wharves' role in it, the scope is there. What we've had to do, and you highlighted it, is we've had to make investments that are necessary to support that growth. And so we've done that, and we're doing it. And we have to remain very efficient, and we have to remain agile. We have to ask ourselves, what is our secret sauce? What can we do that other participants in the trade don't do? And that's why we've concentrated on being a multi-purpose terminal.
Got it. That makes sense. Okay. And then what's the vision for JP stock, which is listed on, the JSC going forward, since it's going to become a holding company? And I mean, what's your vision? Are there any plans to delist in the future? I mean, generally, where's your headspace? How is this business going to change, and how it looks today, JP?
So today, and for the immediate term, JP will be a holding company, and will have as its primary asset 34.5% of the PanJamaica Group, which we think is an excellent asset. And it will also have some cash and some real estate assets. Our view at Jamaica Producers is that we want and believe that we're quite suitable for long-term investors. So JP aspires to be, and I think is, a place where you can put money as an equity investment and count on that money being there in a steady form over the long term. So the nature of the enterprise is about that, and has been that way for a long time. So we are not chasing short-term stock gains or quick wins at the announcement level.
Right.
We are a place where you can buy a piece of a long-term business. So the culture of the enterprise is built around that, the personality of the enterprise, the types of businesses that we look at. So, I hope this doesn't come across as a disappointment, but it's not a primary focus for us to run up the share price, to hit some kind of very narrow quarterly event. It is a priority for us to acquire and hold very good long-term businesses, and to be transparent about that and declare it to our investors. So that's our intention. As it turns out, we believe that the people who are invested in JP share that perspective.
Excellent. And I agree with that. And so that's why it was important to look at the 5-year performance in my mind, because you guys are serious about looking for value propositions, and you're not afraid to do growth by acquisition. And I think your choices and selections have been excellent thus far. And so I really do think this is a great investment for the larger pension funds and long-term investors who really want quality investment that's going to be there in 10 years' time, 20 years' time. You guys have your centennial coming up. When's that going to happen? Approximately, Jeff, you've been around for more than 90
Sure.
years.
So we were born in 1929.
Okay, so
in 2029 we will be 100.
100 years old.
But I don't want you to leave thinking that we're not obsessed with core performance, which we believe delivers both in the short term and the long term.
Yeah.
You said 10, 20 years, but then you yourself highlighted in your 5-year retrospective that we've more than doubled profits and revenues. And if you do your 10-year retrospective, you'll see that that's the same thing. We're compounding over 10 years at materially north of comparable investments from a risk standpoint.
Right.
So in the double digits over a very long term.
Good deal. And I didn't mean to imply that. I just know we have some investors who are focused, and I go through this every day. We manage upwards of $80 billion of clients' funds. And when you're investing in a stock exchange and you're getting really serious, I think of it as medium-term type investment. It's where we want folks to come and put their nest egg up and think medium to long term. But I also have the guys who are focused on, what can I do over the next year or two? And so there's a crowd that likes the short-term stuff, and those who are more focused on our philosophy of slow and steady wins the race, which means long-term investing. So I'm definitely appealing to the large investors who are thinking more long-term, and this is a stock that you can sort of set your money on it and trust them to manage it very well over the medium to long term. But I appreciate your point as well, too, that you also do put out quarterly results, and you're conscious of the need to keep growing the business. Okay, so let me start to take one or two questions from social media, and let's see where that takes us. Okay, so first one comes from, it's more a comment from Sandra Thompson, and thanks for that, Sandra, who says, JP is one of Jamaica's oldest and most stable companies. So thanks for that. Mikey J says, can we expect increase in dividend yields after the amalgamation? Because you guys are obviously going to have a lot of cash, they're thinking.
So PanJam has traditionally had a more frequent and somewhat higher dividend yield than JP. And JP has, because of its history and the somewhat volatile earnings looking backward. I mean, I'm going back 15, 20 years when we were primarily in the banana business, and you would have had the risk of various catastrophes and so on. There was a mindset that we wanted to build cash resources, and as it evolved, we found that having those cash resources on hand allowed us to be very opportunistic and to grab some outstanding deals for shareholders. And I think Kingston Roars would be in that bucket. My expectation is that we're likely to continue with the trajectory that PanJam has seen, but to make sure, as PanJam frankly has already done, that we do have cash reserves and cash resources to be very opportunistic. You can see these enterprises as a place where people can go to get a deal done relatively quickly and reliably, with access to external financing, because leverage helps to drive returns. But there's a sense of ability to execute that we intend to retain, and we've discussed and think we can do that while maintaining the trajectory that PanJam has been on.
Okay, understood. I think that's pretty clear. And Mikey J asks, are there any further partnerships with Norbrook Equities, perhaps, in the logistics space?
We haven't had a discussion around the logistics space, even though we obviously have observed that Norbrook has good businesses there. We like Norbrook and the Norbrook team, the very entrepreneurial team, very driven, good execution. And so if an opportunity presents itself, we certainly would rule them in as appropriate partners for what we want to do.
Okay, very good. And I'd like to give a shout out to Carrie, to Jeff, to Chris, and Gary, who are all members of the YPO Jamaica team. And I've also had the pleasure of being in that group for about 5 years as well, too. So great group of young entrepreneurs, and I'll still include you in
Yay.
that young entrepreneur bucket. I think, although you're probably YPO Gold or should be YPO Gold by now, I still think you fit the bucket. Next question comes in from David Rose. Let me go slow with this one. After the Rio Cobra water, what is the Capital Infrastructure Group's pipeline from a deal perspective?
Well, let me shout out to David. Get to see him outside of the AGM context. We have a pretty good pipeline, David. So that just for those who haven't been paying very close attention, the intention with the Rio Cobra project is to add 50 million gallons a day to the water supply for Kingston, St. Andrews, and Catherine, which of course is very topical right now. And I think it's the right thing to do for Jamaica. So that project is about $77 million US.
Is this a Vinci project?
So we're partnering obviously with Epley, as David had mentioned in his question. But Vinci will be a partner, but also bring construction and operating expertise to the group. So we think the short answer is that the pipeline is robust, and we actually feel good about what we're trying to do, which is bringing local partners with capital, with a comfort level around doing business in the Caribbean and doing business in Jamaica in particular, and doing business for the long term. So bringing that to the table alongside best-in-class local and global expertise at the level of operations or construction contracts. And so we're going to look in all the usual places, power, water, energy, transportation, going forward.
Good deal. And that's another YPO friend there, Tim Del Barry, who's the head of country manager for Vinci. So good going there, Tim and guys and team. I think that's a great project. And we can see with the drought that we're currently experiencing, the importance of improving water distribution in the country, because we don't have a water shortage problem or supply problem. We have a water distribution problem. So it's good to see a PPP project that makes sense and is profitable. Next question comes in again from David, and he's asking about JP Snacks Caribbean continued losses as seen from Wasinco's associate stake calculation. And he's saying what's being done to turn around this business from the impact of the pandemic.
I mean, part of it is a pandemic story. Part of it, and that story is partly pandemic and partly war in Ukraine. So Ukraine is a big producer, market-leading, dominant producer of sunflower oil, and the impact of that, together with the impact on logistics, meant that the palm oil prices were at record highs. I'm talking about multiples of what they would have been prior to those events. And the logistics prices, because most of this stuff originates in Asia, in Southeast Asia, Malaysia, Indonesia, the logistics prices would have quadrupled in the period. So that's part of the story. Part of the story is consumer confidence, including in Jamaica, and us needing to make sure that we find a way to reignite our relationship with the consumer. What's happened in COVID is that the the consumption patterns that obviously would have been connected to schools and commuters, which was historically a big part of our portfolio, the dynamic changed. We're pretty confident that one way or another we're going to get back. It's a business that we've done for a long time, and we're not happy with the current status quo. But we do have a very strong distribution partner. We have the capacity to rebuild. We have great products, etc. So we intend to do that. And at the same time, we are expanding into the Latin market. So we've had a long-established domestic market and a long-established West Indian, if you will, diaspora market. What we are concentrating on right now to get the right result for that business is to grow in the Latin markets, most notably in the DR itself, but also to some extent in Central America. So I would say that we are positive about the outlook for that business, but we do have some work to do.
Good deal. And in rough terms, Jeff, what percentage of your revenues would you say you're earning hard currency? So we see $29 billion of revenues. What percentage of that is earning foreign exchange for the country or for the business?
So some of what Kingston Wharves does is
build in U.S.
Most of what it does is build in U.S. Some of it is settled in Jamaican dollars.
Got it.
But so I prefer to view that as a U.S. dollar business, and it's very much indexed. It's an international business. You're importing a container into Jamaica. You're paying for that service as you would pay the shipping line. Well, whether we choose to accept Jamaican dollars because we have to pay our team members in Jamaican dollars or other local expenses is really just how we manage the business. So the only business that we do that is in Jamaican dollars is the banana business, the fresh, ripe banana, pineapple business that you buy at your local supermarket or you buy at the local markets. And that may be 2% of our.
So the vast majority of your earnings are essentially foreign exchange related.
That is true. And, many of your listeners are saying, well, that's great. Maybe they are saying that. But they would probably not be paying close attention to 2022. Because in 2022, we actually had a revaluation or an appreciation of the Jamaican dollar relative to the US dollar and a material appreciation of the Jamaican dollar relative to euro, which is another major currency for us, sterling. And so over the 90 years of our history, by and large, being a hard currency, if you will, denominated company has worked to our advantage. Last year, we not only, at the level of our operations, would have had the adverse FX impact, but we hold relatively large cash balances in US dollars.
Hard currency.
And so whereas in 2021, we might have had an exchange gain we had an exchange loss in 22, and the combined impact, the
spread,
the delta on that is north of $500 million in a year. So we had to overcome that to get the results that we did in 2022.
Well, there's a hidden gem there. So that in 2023, if we follow the normal trajectory of exchange rate depreciation, you will have some tailwind behind you in that regard. So you had a FX loss last year. Hopefully you'll return to the normal trend of having FX gains for holding hard assets.
I think Mayberry is a better predictor of exchange rates than our operating business.
Yes. Well, at the macroeconomic level, obviously the expectation is as long as we're targeting, higher levels of inflation than North America, generally speaking, 4 percentage points higher. The U.S. is generally targeting 2% inflation, and we're generally targeting, 4 to 6% inflation. I think general economic theory just means the exchange rate on average will be devaluing by 2 to 4% per annum. That's just sort of inflation rate parity. So I think holding the hard currency assets will more often than not, as you said, work out to your advantage.
We're still keeping a long USD position on the cash side of the business.
Yeah, and I think that makes very good sense. Another question coming in here is the acquisition of MFS, I guess that's Miami Freight and Shipping. In January 2022, we noticed we have revenues of $422 million, but only a profit of approximately $99,000. Given that your purchase price also reflects a 3-year post-acquisition sort of earn-out period, is it safe to assume we expect better profits from this business?
Yes. I mean, first of all, I appreciate you paying attention to the financials at that level of detail. It's good stuff. And yeah, the short answer is there's an earn-out component, and we intend to deliver for ourselves and for the vendors. We think that it's a business that we understand pretty well. We've done that business for many years out of the UK, and it's done pretty well for us, and very stable, very well organized business. But what's happening is that the e-commerce business is now beginning to present a nice opportunity coming out of the US market. And so I think everybody knows that you can, buy your back to school items and your sneakers or whatever online, and there are a whole bunch of air couriers that can bring it to Jamaica. But if you wanted to buy a boardroom table online, which you can do, or some kind of plant and equipment or whatever online, that business is well set up to do that. And we believe that's going to be a winner for us.
Excellent. Happy to hear that.
And it integrates well with our understanding of the inbound logistics, the shipping lines that call out of South Florida, call Kingston Wharves. And obviously we discharge the cargo and can ensure that customers can get it quickly.
Good deal. And so, we talked about shipping and logistics. And for those of you who watched the program, you know we had Charlie Johnston and Martin Rickman a couple of weeks ago, where we talked about the German ship repair business that, again, here at Mayberry, we helped promote and raise financing for them. And I really do think it complements the logistics and infrastructure business and ambitions of Jamaica to improve its positioning in the maritime and logistics space, generally speaking. So it's great to hear all of these things coming together, Jeffrey. And I know you supported it through a few pension funds that you sit on and are involved on, and you obviously know a thing or two about that project as well too. So I'm really excited about logistics, infrastructure, maritime logistics in particular, and the future growth potential for Jamaica in that regard. Okay, so we got about 5-6 more minutes left, folks. Still have a lot more questions.
All right, I'll be brief.
A lot more questions.
We'll do a lightning round.
No, we a lot more questions still out there to be answered. I think this has been a good eye opener for me, Jeff, in terms of appreciating the direction that you guys are going. Another question coming in here from none other than David Rose. He says, you mentioned earlier how the food and drink segment had compressed margins. However, profit before taxes only down 2% in that segment year over year. How was the business able to maintain this level of performance? We had revenue growth. Is the short answer? Yeah. And so I slightly disagree with you, David, on that. So he grew revenues substantially from 12 billion to 17 billion. So the food and drink business saw great growth in revenues, but the profits were relatively
It's a good
flat.
question, as usual, from David, because the expectation typically in a business like ours is you'd get that revenue growth and you'd have an installed base of capital, plant and equipment, overhead, salespeople, you name it. And therefore, if you get that level of revenue growth, it ought to drop to the bottom line. The fact that it didn't is a margin story.
Okay, very good.
And it's normalizing, but it's something that I have to watch very carefully because consumer confidence in Europe has been relatively strong. I mean, the economies that we do business in have pretty stable employment, but it's something that we pay close attention to.
Good deal. And so with another question coming in, with the merger, amalgamation between yourself and PanJam and a lot more cash between the two of you, can we expect to see more deals in the near term? More acquisition deals?
That's the point.
That's the whole point, right?
That's the point.
Good deal. Appreciate that. So, again, I really look forward to having you back again. You are a great annual feature especially when the results are looking as great as they did. So again, folks, just to remind you guys, we saw a 25% growth in the profitability, profit attributable to shareholders, up from 1.85 billion to 2.3 billion dollars in the last year, and that's not just a pandemic story. I mean, this is great profits by any measure for the group, which again is coming from 660 million dollars of profits attributable to shareholders 5 years ago. So even over a 5-year run, that's 250% growth. And I think we
one of the things that I just want to react to the question about more acquisitions, and maybe I'm tempted to be fulsome even when I probably should be brief. But one of the things that we have to work with, and I think we're going to be successful at this, but I do want to put you on notice, is that because of the relative scale of the combined enterprise, we've obviously been able to use deals to move the needle quite significantly on our enterprise, and we intend that to continue and to be part of the engine. But if you're running a shareholders' equity of 450 to 500 million US, or total assets of 750 million, 110 or north of that billion J, the deal ticket sizes have to be a little bit larger to compound at the same rate. And so that's going to be an area of focus for us.
Good deal. And I'm sure David knows this, but I want listeners to appreciate this. And the one thing I like about the deal with what you're doing with PanJam is, PanJam's book value as it relates to its ownership in Sagicor is, like $30 billion below the market value of Sagicor shares. So there's some really good inherent value in the ownership of Sagicor that you don't see on the PanJam balance sheet. So that is to say, they don't market to market; they carry that cost because it's an affiliated company.
I thought we were the only one who noticed that.
No, I'm sure you weren't. I'm sure you aren't. I've been looking at it for some time, and I've actually had a conversation or two with Joanna and Stephen about, are you guys going to unlock some of that value? But I guess they're obsessed with owning 30%. 30.2% of Sagicor, but
we think Sagicor is a good business.
Great business,
well run, and
great
and it has a great franchise in Jamaica.
Great business, but if they even sold 5% of their Sagicor shares, they could unlock $8 billion of gain to the P&L. So it's got that inherent value locked into it, and they play really hard in the commercial real estate space, and so that complements you guys on the infrastructure side of the logistics. And you mentioned the need to move some of your warehouses from being port side to a little further out to give you more space to work on the ports. And so there's clearly some additional investments coming in that space. And I do like how I've seen the port developing and what you guys have done in the last 5 years and continue to do, the expansion across the road by Tinson Pen, where you can hold upwards of 5,000 cars, I'm told.
Yep.
And it's great to see those Rolo ships come in, and you roll off 5,000 to 8,000 cars, and that ship's gone, and then you guys break up that stuff and ship it to upwards of 26 countries now. So it's a great business. I really like it. It's in terms of the outlook, Jamaica also, like I said, is poised to grow substantially in this logistics space. So it's not just about tourism and BPO, although you do a bit of both as well too, since you own hotels and own a share of a BPO business through PanJam.
Yeah, that's an important point. Let me just describe it for people.
Sure.
When you look back at you mentioned the 90 plus years of JP's history. A good chunk of that history, the Jamaican economy was underpinned by commodities, and in the agricultural space, bananas would have featured very significantly, and we were an important part of that story, and it made very good money for us in the 1990s, and as some of the principals of Mayberry would definitely know. But the Jamaican economy looking forward, from our perspective, is going to be underpinned by services, very strong potential in the service economy. And by that we mean tourism, broadly defined, so hotels, attractions. The BPO space, we think we have an opportunity to win there as a country, and logistics. Mm-hmm. And what you're going to see in this Pan-Jamaica group is an enterprise that has market-leading positions in all of those. And in addition to that, the financial services part of it, which is also, as you know, Dan, an area in which Jamaica has pretty good depth for a country of our size. And so we think that makes that business that we're doing on the Jamaica side poised for the kind of long-term growth about which we spoke.
Absolutely. I couldn't agree with you more. And, we go all throughout the Caribbean looking for deals, and it's amazing to appreciate the depth of our capital markets, in particular in Jamaica, which is absent in a lot of other territories, where Caribbean region territories or countries where you would have thought that they would have a capital market. Like, one does not exist in my home country, the Bahamas. There's no capital market in the Bahamas at all. And so I do think you guys are very well positioned in those 4 broad categories that you mentioned. And like I said, I look forward to coming back, in the next, maybe we can't wait 12 months. Maybe we have to get you back in 6 or 9 months, because we're going to see the effect of the 2 businesses coming together, I'm sure.
You should get Joanna to come.
Yeah, I would love to have Joanna. I've invited Joanna, so Joanna, you need to come. You need to come out next time for sure. And probably have both of you, if we could be so lucky as to have you both on the program. So really appreciate you taking time out of your busy schedule, Jeff, to come and educate our viewers on all things GP, and now to be the PanJam group going forward. We're really excited about the prospects, and I think it's going to be one of the biggest deals of 2023 in terms of implementation. And so we're excited about it. Our stock market is alive and kicking. Well, thanks for that, guys. As promised, we'll now announce the winners for our giveaway. So I'd like to extend congratulations to @JCKnight40, @Shan345, Unstoppable, Kara27, and Kimani. Great. Well, that's it for today's discussions. I'd like to thank our viewers for tuning in today. Your support is always appreciated. Of course, I have to thank Jeffrey Hall himself for participating in today's discussions and providing the insights that he did. Thank you for sharing. Really appreciate it. Look forward to having you back.
Thanks for having me. It's been fun.
To our viewers, be sure to look out for future programs on our investor forum by following us on social media. We share all things forum related on our social media pages. Don't forget to subscribe to our YouTube channel, Mayberry Investments Limited. Remember, wise investors keep safe, and slow and steady wins the race. Goodbye.
The Mayberry Investments Limited Virtual Investor Forum has been the standard for investor education in Jamaica for decades, where top financial minds provide comprehensive insight into the market and ideal investment strategies and opportunities for our clients. Celebrating 37 years of excellence in investment banking. The Mayberry Virtual Investor Forum, investing in Jamaica.